All right, we're live. I've done a lot to screw up the webinar today. Well, here we are. We're live. I'm gonna wait a second to make sure I got everything going correctly here. Apologies, everyone, for being late to the old stream here. I can see some eyeballs are starting to form. Again, my name is Brent Kochuba of SpotGamma, and we are extremely excited to offer the whole wide world, and there are people from all over the world checking out Trace today for free. SpotGamma.com. I understand we launched with a different link. For those of you who don't know, I'm over 40 years old, so I am technologically impaired, I suppose you could say. Fix the old camera here. All right. There we go. All right. So what's going on today in the old Trace stream? What's up, Tom? Good to see you. Nice to see you as well, Chaz. What you're looking at now is our Trace product. This is new. We just launched this on Monday. And we had an extensive webinar on Tuesday about this. We went for over an hour. We were extremely excited to offer this product. We are getting incredible feedback. And again, you can try it for free today. Why is today significant? Well, let's talk about first, just give a quick rundown of exactly what Trace is doing as we look at it live on the screen. So in this case, let's start first order principles here. We'll go to our gamma map. Now, what you see in this gamma map is this is big, bright, and blue. What does that mean? That means we're in a positive gamma regime. What does positive gamma means? Dealers are going to buy the dips and they're going to sell the rips. Now, how do we project that? Well, we take in a bunch of various data feeds, and these data feeds help us to parse through whether or not positions are opening and closing. We run that through some models of our own, and we produce a model that updates the SPX gamma position in roughly 10-minute intervals throughout the day. And we think it is the most accurate depiction of dealer positioning that you can get. So that is what drives these levels. There's absolutely nothing naive about this. We think it is the latest and greatest thing available. So this is updating continuously through the day. And what are we doing here? We are saying right here, right now, we have roughly $320 million of gamma. This is at the money gamma. And we say, okay, great. What happens if the market moves up? Or what happens if the market moves down? How does dealer gamma hedging profiles, how does that change? What happens as we move over the course of the day? And so we project over all this range, over this entire range of price and time to see how gamma is changing. And what is cool about this is if you zoom way out, you can see kind of a high level view of a Gex curve, so to speak, wherein the blue areas are positive gamma zones and the red areas are negative gamma zones. And as you can see right now, the map is really blue across the board. And that tells us that the S&P is pretty stable right now. Dips are probably going to get bought. Rallies are probably going to get sold. And most of you are probably saying, hey, Brent, that's the way it's been going every single day this week. And that's true because of this positive gamma environment. On top of this positive gamma environment, we are getting sizable zero DTE flows coming into the market. Those zero DTE flows tend to sell rallies. They sell calls into rallies. And then when the market comes down, they tend to sell puts, and that keeps the S&P pretty contained. You want to see what the zero DTE positions only are? Let's click that, and then you can see exactly these positions occurring throughout the day. So you'll see these positions come into and out of the market, updated throughout the day. The gamma map changes throughout the day, and people are finding this is an incredible way to navigate these markets. What I want to talk about, though, is not necessarily the zero DTE position. I want to talk about the elephant in the room, which is, of course, we all know the JP Morgan collar trade. And this is a trade that is usually, listen, it's kind of been beat to death a little bit. But the reason that it is so interesting here is because, as you can see on your screen right here, there is a massive blue bar. That giant blue bar, that represents 40,000 calls that the JP Morgan fund has sold. Those positions will be rolled on Monday. That is fact because they expire on Monday. And what does that mean? That means a lot of this gamma that we're looking at here is going to go away. It's gone. It also means that we're probably pinning for today. And it also means that if you have Trace, you're going to see all these positions shift, right? There's a lot of positions that are going to shift on Monday as a result of this position changing and rolling. And so if you want to know exactly what's happening as it happens, you're going to have Trace on Monday. And on that point, we have a great deal for new subscribers going on right now. if you go to this site right here, spotgamma.com/trace the market, you can lock in a great deal right now. We have a very impressive, amazing offer that goes away Sunday night. So that is that note. I do have access to the chat window here. So if you have any questions, I am happy to tackle those. But we can look at these flows in a bunch of different ways. Obviously, what we're looking at here is the gamma map. And what you see here is stability indicator. What is that stability indicator telling you? Stability is a representation of market movement. And if you have very high stability like we have now, you should probably anticipate the market not doing a whole lot. And that is exactly what is taking place. And not only is that taking place today, quite frankly, it's been happening all week. We've only moved roughly 75 bips. That's about the range, so 0.75% over this entire week. I want to talk about some of the knock-on effects of that momentarily. But this stability is essentially telling you it's a sleeper of a day. Again, not too surprising on a day like today. However, when this position changes on Monday, you can expect that stability gauge is probably not going to show 88%. Stuff is going to start to move. So today is a great day to learn about these positions, learn how they change, because I think Monday stuff really starts to move around. This stability indicator is statistically backed, and basically what it says is when stability drops around 30%, we should start to expect much wider ranges of market movement. And the reason that we call this the stability indicator instead of the volatility indicator is because people generally associate volatility with the market going down, right? And we wanted to be clear here. Stability is, in this case, an assessment of how much the market moves. Sometimes we could have volatility to the upside, as well as the downside. So that is the read on that. We can also add our key levels. And a lot of people ask, finally, what is this purple line here? I shouldn't say finally, because there's always a couple more questions following up. But this is our HIRO flow, right? What's cool about HIRO is a real-time approximation of delta impact. So what does that mean? That essentially means every single trade that comes in the SPX, S&P 500, all individual stocks, we're monitoring the delta hedging impact. So how much we think dealers and market makers may have to buy or sell because of that brand new options flow coming into the market. So what you can see right here, right now in real time is we have negative deltas coming into the market. What does that mean? People are buying puts or selling calls. And so that is pressuring or likely to pressure the market a bit lower. Obviously, we have this giant strike here, so we're not expecting that this manifests into anything of a really big sell-off, any kind of a major material sell-off, but it is adding a little bit of selling pressure. And what's cool about this is you can toggle the HIRO flows from the S&P basket, which monitors each individual stock in the S&P 500. So where are the options flows in sum or an aggregate for individual stocks in the S&P, or the index itself. So that gives you a couple of different lenses to watch things. So it's very powerful real-time information that can help you to assess positioning here. I wanted to show you something that I thought was interesting. If you sign up for Alpha membership, not only do you have Trace, but you get our Founders Notes every morning. I personally have written every single Founders Note since January of 2020 when we launched. It's funny, back then we were trying to convince people that options flows moved markets, and everyone, pushed back on that idea. Now, after meme mania and some of these other things, it's commonly held belief. And so we've been doing this for a long time, looking at just gammas. And what we point out here is this is what we call realized volatility. It's probably a little bit hard to see, so I'm going to change the chart. But I just want to say that the trace map is explaining something that we're seeing that's super interesting here, right? First, I want to highlight this. The 0DT straddle, right? So if you take the call and put at the money this morning before we had the core PCE print, that was trading for $25, which if you divide $25 by where the market's trading, it's about 45 bips. So the market was betting on 45 basis points of movement today. That's about as low as you get. I've seen it marginally lower a few times in the past, but essentially what that's telling you is volatility expectations today are about as low as they possibly can get. And so when you think about that, and then you think about how much gamma we've had, right? This huge amount of gamma, that map is so blue. We're at this lower bound in volatility. What does that mean? Well, it's like a floor. Volatility's gotten pushed down to this floor, which is really interesting. And so if we look at this realized vol page, this is part of the Alpha membership. So if you want to check this out, you can for yourself. What you see here, and I'll zoom in so y'all get it. This red line is 5-day realized volatility. So this tells us over the last week, how much has the market been moving? Granted, it's a very short window, but you can see that's 3%. That's very, very, very low. As you can see, it's about as low as we've gotten over the last multiple years. 1 month realized vol, for those of you who are with me on this, is about 13%. So, we're seeing all volatility metrics come down, realized volatility come down, which essentially shows us that the market is not moving that much over the last month, but it's really not moving much this past week. And so, consistent with our founders note here, what we said was, look, we're not moving much. We've had only a 75 basis point range. And that's why, because we've had this giant amount of gamma that's just sitting on the market. It is like this blanket that is just covering things. So get to the point, Brent. You see on our map, it is this bright blue, and you see this giant strike sitting right here, right? 200, $300 million worth of positive gamma sitting at this strike. This strike is going to go away on Monday. It's going to expire on Monday, be rolled to a new position. And so the amount of gamma that we have, the amount of stability that we have in the market is going to change. So the first order effect is we should all expect a little bit more volatility on Monday, market movement. Now, does that mean that the market moves up or down? You got to pull in some other metrics to assess that, I think. But the key order is those of you who are just kind of like betting on no trading ranges every day and kind of a boring market. I think that starts to change on Monday into the rest of the week. So that is the major insight here as we launch into the roll period. The other map that we offer here, which is incredibly helpful and very unique, is this delta pressure map. So what is this? We assume at the money, which is right where the S&P is trading, we assume that dealers are what's called delta neutral. They don't have any trading to do. And then we say, okay, what do we estimate that's set to happen if the market goes up or the market goes down? And in this case, what we measure is red above. What does red mean? Red means selling pressure. What does blue mean? Blue means buying pressure. And this map pressure is changing over the course of the day. So I want you to notice two things. Number one is the path of least resistance, the neutral path, is basically just gliding along into 5750, right? And so if you're going to guess at what the market is set to do today, probably a lot of nothing, probably just trending along the strike. What's also interesting is, yes, this is a huge strike for Monday, but if we click and show only 0 DTE positions, guess what? It's also the biggest 0 DTE strike for today, 60 million bucks of gamma there. So you have multiple time frames, right, where 5750 is just the dominant position. So again, we have this trace element here of just delta neutral lining up. And the other thing is, you'll notice these contour lines, and the contour lines are simply meant to describe the map. What does that mean? When you see the contour lines are more plentiful or more stacked together, they're kind of a little more compacted. That suggests that there's more support versus if you had more spaced out lines above, for example. Here, what you see is it's pretty neutral. It's pretty balanced, right? So selling pressure and buying pressure are pretty equal, and they're all just moving sideways. You see times in history, if you go back in time, you can see that these delta lines and the delta neutral position changes quite often, and it's really fascinating to watch. And on that point, we're open here. You can go back several months in time and look at the maps over each day, and then not only that, you can replay these maps. So if you want to go, well, would this have helped me on September 11th when the market dropped 100 handles? Go back and check it out. Would have helped me on August 5th when the S&P opened at 5120 and the VIX was over 50? Go back and check it out. By the way, we think it's been very helpful through all those periods. But you can go back, verify that for yourself. And then the last thing we note here is this charm map. Charm is most beneficial when you're trying to estimate how 0 DTE options are going to impact the market. Red is selling pressure. Blue is buying pressure, and what we generally find is the S&P tends to find its way to one of these two zones, right? So right where blue and red meet, this kind of equilibrium point seems to be where we settle. Fascinating, again, the big equilibrium point that we see here today, 5750. So in this case, we have a lot of ducks lined up in a row here, betting that 5750 is going to be the level that comes up into the close today. And so, on this particular day, that's what we're going to be watching very closely. Viva asks, how often does this chart update? The chart itself, every 10 minutes. The HIRO line is real time. So you're going to see the HIRO line and the S&P price update every minute. HIRO updates every single trade that comes in. There's like a nanosecond delay, and we go out. One good trade asks, can we use this on NDX right now? This is only for the SPX index contracts. We are building up our repository and building up our models for single stocks and other index products. it takes a while for us to build up this data, right? We have to get a read on how positions are, how people are positioned across all expirations. So you got to let that build out in time, right? Because not all options are 0DT. 50% are, but there's a lot of big positions, right, that get put out 6 months in time. So you got to wait for some of these positions to expire. You got to wait for that open interest to build up, and that's how you can get going. People are asking how to play intraday with Trace. It's about support and resistance levels. Okay. We actually put out a great PDF. If you caught the webinar, we can maybe share that PDF with you as well. Let's go through the basic checklist of what we look at to assess positions. Number one, we start with gamma buy strike. Today, there is a giant position. It is not always that there is a single large position on the day, but this is the most notable position on the board. If we zoom out a little bit, you see there's a small amount of calls that dealers are long above. If dealers are long an option, that is a positive gamma position. What does that mean? The market rallies into this area, there should be selling pressure. And if the market comes back down, there should be buying pressure. So when we zoom out a little bit, we see there's very clearly a pocket of positive gamma resistance above. And this is in the 5770 to 5780 area. Notice if I hover over the strikes there, we tell you how big that strike is. It's a 90th percentile strike. What does that mean? It's pretty large in terms of strikes. It's nowhere near as big as this really kind of beast level, right? 5750. And then down below, we have a couple of other positive gamma strikes at 5735 and 5720. Gamma is highest for at the money options and increases as we get closer to expiration. So as the S&P price is moving and as time is advancing, we're constantly updating the map to show you exactly how the gamma position is changing. And not only that, you can see how the market reacted to these positions over the course of a day, right? So if I want to know what support and resistance is, you can see we topped right here, 57.65. Let's see what those positions look like earlier in the day. Kind of wind back here, you can see when we move up, look what happens. These calls increase, they get sold, right? People are selling calls into that rally. Market comes back down into this giant supportive position here, 5750. You're curious, what is specifically the 0DT position? Let's look at the net open interest, which is what we show you. This updates every 10 minutes. Somebody's sitting here, pretty large net call position. As you can see here, 6,000 calls. So somebody has sold 6,000 calls to dealers long that strike. So that means they're going to be adding selling pressure when the market goes up, and they're going to be buying back as the market goes down. Very few puts here. You can see the dealer is also long these strikes above. If the dealer is long, this is what we're looking at, the dealer side of the equation, the market maker side of the equation. That means traders have been selling these calls, right? If I'm a trader, I want to short calls, I short them. There's a market maker that has to buy those calls, and these positions are updated all day long. We had an excellent example yesterday of the impact of 0DT positions. So let's take a look at that from yesterday, just to give you an example. And we put this on Twitter in the morning that we were referencing this position right here. So this is not hindsight. We said, look, when this position is closed, this put strike, dealers were short this put. So when this closed, we're waiting for the market to rally when this position closes. So I want to show you this, right? The S&P trades down lower and lower and lower. And at right here, see it go away? See that? What I want you to watch is 1 o'clock, full position. Here's where the S&P is. If I advance this 10 minutes, it's starting to get closed. See that? Now the position is fully closed. Now watch the market. It's going to rip. At that exact time. You can see it in HIRO as well. HIRO bottomed at that same time. That's showing you that this huge 0DTE position was closed out, right? And that is the impact of 0DTE in the market. You see it every single day. So people that sit there and tell you, 0DTE doesn't matter, they literally don't know what they're talking about. You can watch the positions open and close all day long, and then you see that tied to market movement. Again, it shows out in real time. BB asks about backtesting, the stability indicator, and the idea of gamma, positive gamma support, negative gamma resistance. That is a statistically backed measure driven by the trace data. So yes, stuff is statistically backed in these maps. A couple questions there, how you can get in. Everyone can access Trace for today. Today is the last preview day, and you have until Sunday at midnight to lock in on this data. So, look, we're making a big deal about this JP Morgan position. It doesn't always matter, right? In fact, I was looking at this. Apologies for the sloppiness of the sheet, but I've been tracking these JP Morgan collar positions over time. This is obviously not a public consumption uh, spreadsheet. So I track these positions. And the only time that we've really been recently around, as you can see here, was like September 2022, March of 2022, right? We're in the neighborhood of the call position, which is here where they short the call. So I've been tracking these positions. They haven't been really relevant over the course of the last few months. But what's fascinating is, for those of you who don't know about this position, let me add a little bit in. What happens is JP Morgan this fund comes out and they sell a call. Again, they have a bunch of big equity position, right? They own a bunch of stocks. They sell a big call position. They're going to sell it for December, and they're going to use those funds to buy a put spread. And so the idea is, I'm going to sell a call to fund a put spread so if the market crashes, I'm protected. What's so funny is there's only been 2 times in recent history that position has come near the market, or the market has gone near their put strike. And it looks like that put strike actually held the market up. So what do I mean by that? You can see the long put position here is at 45.10, and the market closed just above that level, 45.30. In September of 2022, the put was at 35.80 and the market closed 35.85. So that put position never went in the money to actually hedge out their position, right? So the hedge did nothing. And not only that, I think it's because the dealer position is so big, the dealers defending that position are hedging against it. So it gets kind of interesting because as the size of that JP Morgan collar position increases, it becomes more impactful to dealer flows, which actually you could argue maybe hurts the underlying equity position a little bit. Pretty fascinating kind of thing to think about. And so when we move forward here and we're looking right here, right now, you can see the impact of this position because we're on top of it, right? And as gamma increases for at the money options, as we get closer to expiration, this thing is the most dominant position in the market. We could have some quarterly rebalance flows on Monday, but when you're thinking about whatever other macro factor you want to add in right now, it needs to eclipse a giant amount of gamma that's sitting here. And the other thing that's interesting about dealer hedging flows is they're persistent. So what do I mean by that? You could have a rebalance due to some yen carry trade, quarterly fund roll, whatever, and they got to go and buy some stock, or they got to go buy and sell some stock. Once they're done, right? But gamma hedging is, I got to hedge a bunch. I got to buy a bunch of stock now. I got to sell a bunch of stock later. I got to buy a bunch of stock now. I got to sell a bunch later. It just is going constantly, right? It's so you may overwhelm it in the short term with some type of other flow, but guess what? It's going to come right back in here. That hedging flow is going to come right back in and move the market back in line with these dealer hedging positions. And so, look, when we zoom out here, there's positive gamma just all over the place, which signals pretty stable markets going forward, and at least into Monday, which is interesting. Is you see this is 4 o'clock right here. So after 4 o'clock, we remove 0 DTE positions and we give you a little preview of what tomorrow looks like, i.e. Monday. We're still in a positive gamma position, obviously, because that JP Morgan collar trade expires in the evening, in the PM. So it's going to be fascinating to watch how this gamma map changes for Tuesday, as we see positions roll and close, and the amount of gamma that we have is significantly reduced. Wave trading asks here, why calls always have positive gamma and puts negative? They don't. Calls and puts can be bought or sold, right? Which is why you're seeing red and blue strikes on here, right? So when you're looking at this map, if it's red, let me just turn on 0 DTE. If it's red, somebody bought that position, right? Which means that the dealers short these calls, but they're long these other calls. So it could be a spread, right? Same thing down here. There's a small negative position, so there could be a put spread on here. What's interesting is about this, and the naive gamma modeling, right, is that we would always model calls are sold by market makers and puts are bought. And if you think about the JP Morgan collar trade, which is one of the biggest options positions in existence, that's exactly what they're doing. They're selling a whole bunch of calls and they're buying puts. And so when you're trying to kind of, assess positioning, that is exactly what's happening, but it doesn't always work like that. And then specifically when you're watching 0 DTE positions change, you can't forecast what the zero DT positions are going to be, right? You don't know how big they're going to be. You don't know exactly when they're going to come into and out of the market. But when you're able to watch it in near real time, or in this case, updated every 10 minutes, then you know exactly what's happened. The other thing is, as we talked about this yesterday, is HIRO is real time. So if you know, look, there's this big 5750 position sitting here, right? And the dealers are long this call. Well, if I see HIRO suddenly react, right, move up or down a bunch, I know that there's some big activity taking place. And I can bet that, okay, I know there's a huge position here at 5750. So I can start to put the pieces together and act immediately or take faster action, knowing that this position may update. And then when I get the trace map update, I can go, oh, yeah, look, position was closed out. And how do you know that? See the wicks here? The wick tells you the largest, most negative or most positive that position was for today. So if we just look at this red strike, right, at some point today, this morning, it was bigger. You could see that, right, because the wick is over here, and that position's slowly eroding. So it either is getting eroded by the fact that gamma is reducing, or it's being closed out, right? Could be both. For those of you using the Trace product, you have a lot of questions. I'm maybe going a little bit fast here. If you hit this eye icon, we give you a really wonderful 9-page manual. We go through every aspect in detail. We give you some examples. It's really a great manual, great resource for people trying to understand the map. We're also currently offering live chat support. So you can click this and talk to a human. Not an AI bot there, but an actual human. So a lot of people are saying, oh, great. How do I make money on this? I mean, there's a variety of ways that you can position off of this. Number one is support and resistance. Okay. So where you see these big strikes, we believe those are support and or resistance strikes. So those of you who are futures traders, you could trade support and resistance levels off of this. Options traders may want to sell put spreads below support levels, for example, sell calls above. We just did an excellent podcast with a friend of ours, Eric. We could put his podcast link out there, and he likes to sell oftentimes zero DTE straddles, right, and bet or flies, right, or condors, things that are betting that the S&P doesn't move that much. And so when you know where the big zero DTE positions are on the day, you can bet on. I believe you can more efficiently bet on what the range is going to be. So you can leg into positions that way. When you're looking at the delta pressure map in particular, where do we think buying and selling comes into the market? What is the path of least resistance? Since the day has started, it's 5750. That is where the huge gamma strike is. If you look at our charm map and you say, okay, where should we target for the end of day? I said you should look at where these big blue and red zones line up. So you're talking 5750 again, right? So suddenly you get all these, the ducks all line up in a row, and you can start to say, okay, I think that there's a really strong I feel pretty good that we're going to close at 5750 today, right? And the market's pretty stable. There's a big positive gamma market here. So I shouldn't probably bet that I'm going to get a bunch of volatility today, right? So maybe you go, okay, I only trade long vol positions. I'm just going to sit on my hands because there's not a great opportunity here. Doesn't seem like the market's going to suddenly crash 1%. Or I can say to myself, I can somehow bet on us moving down into this position. So if we suddenly kind of, in the short term move above or below that level, then let's bet on mean reversion in here. And what you can see is this charm map here showing buying pressure. So what does that mean? That means the decay of the options positions that we have on for today, particularly those zero DT positions, are going to offer some market support. That's what this is telling me. So all of our maps right now are perfectly in sync with this idea that we just kind of glide into this 5750 area close. And so once you know that, or you can assign that a little bit of a higher probability than some other move, then there's a lot of trades you can put on, right? Particularly for an options trader, there's a lot of different options there. A lot of ways to play that. Faisy, great feedback from you. Thank you, sir. Most appreciated. And look, a lot of people make a lot of claims about a lot of different tools, and that's why we gave it literally open to everybody. We've never done it before, but we said we feel so positive about this. We think it shows market movement in a way that really hasn't ever been shown before. And these lenses are so unique, and it updates all day long throughout the course of the day, continuously updating. You combine it with HIRO, you combine it with our morning notes. I mean, we think it's really compelling. And so we said everyone can try this out, right? And so you can make a clean assessment for yourself. And not only that, you go, today's boring, Brent. Okay, go look back at Monday, Tuesday, Wednesday, go back and look at times in our webinar. Every single day of the first week of September, we put our deck together the second week of September. So we just said, let's take the previous week and bam, every single day, right? Tuesday, Wednesday, Thursday, Friday, the delta pressure showed whether the market was going to move up or down, right? And there's no guarantees in this business. Obviously, we're assigning probabilities, but we're just seeing that this is helping to describe market movement before in such a compelling manner. So we think Trace is really fantastic for those of you who are day traders. It's a question from Anthony. This is being recorded, Anthony. Different Anthony on there. A lot of Anthony's today, so you could check that out. A lot of different ways you could change statistical lookbacks, customize colors on the platform, etc. I understand that I've been calling this blue. People get very upset about that. Say it's purple. This is a whole thing. I call it blue just to antagonize those of you who get upset. Again, looking at open interest so we can see how open interest shifts over time, how these positions change. And it's, look, there it is, right? Dealers have a giant long call position on right now. There is no mistaking how big that JP Morgan position is, especially when we zoom way out. And that new collar is likely to move up, probably 5% roughly. So somewhere in the maybe 6,000 area. Eric knows why it's called blue. Sure you do. All right, I see you trolling on colors. Let's we'll have to move along here. Interesting move here as we test the Gamma Strike. So I'm trolling through the YouTube / Twitter comments here. Can I shed more lines and how they shift over time? Yeah, so let's look at a past day, right? Let's look at September 11th. Or before we do that, let's look at Fed Day. So we showed you, it's like an optometrist. Okay, let's do it this way. So here's the positive gamma position for today. Intensely bright blue. Not always this bright blue. Again, I don't want to keep saying the JP Morgan, but that trade, there it is, offering a ton of positive gamma. What did this look like on Fed Day? We were not near 5750, right? We were several percents below. And the map is really big and bright red. And that's telling us that this is a negative gamma stance for market makers, which means that we're going to see them chasing price, which exacerbates volatility. What does that mean? It means the market is moving a lot. And quite frankly, the number of moves that we had, and we talked about this, the number of moves, 50 bips or greater, that we saw after 2 o'clock was astonishing. I mean, as I play the map forward here, you'll see the market just ripping all over the place. See that? It's like a heart attack patient. And the other thing that's so fascinating about this is, see this? One huge position, 56.35. That's where it bounced every single time. See that? Bounce, 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 bounce. And then right here, this position gets closed, and magically S&P closes on the low of the day. See this? Watch. See, it's gone. And bam, we go to new lows on the day. So you think about like a Fed day and you go, oh, that's not the options market, right? There's so much other stuff going on. But there you go. Not only that, there was 1 million contracts traded in the first 2 minutes after the FOMC announcement. Astonishing number of contracts that traded. So that is what a map looks like in an extreme gamma environment. You want to look at another incredible period. We go back to September 11th. This was the day where we dropped 100 handles from 5,500 down to 5,400. And then it's at that point that, the NVIDIA comes out and says, everybody still wants our chips. And then the market just rips. So this is our gamma map. It's blue above, positive gamma strikes, stability above here. But look below, right? Under 5,500. And if you read our founders notes, this was the risk level. We have a negative gamma position. So what does that mean? That means I don't know if the market's going to go up or down today. But if we do break 5,500, I'm willing to bet that we're going to start moving down pretty quick, right? So you give me that statement. Okay, if we go under 5,500, I'm willing to be short in this example because there is this negative gamma environment. And as you could see, we just basically rip on down through that negative gamma environment, to the positive gamma environment. Where's the positive gamma environment? You'll see 5,400. It turns blue. See that? Before the S&P hits there. And that's where we find stability because we see these 0 DTE positions start to come into the market. And then we move back up to the big positive gamma environment above. So you can see this stuff change in real time. Again, what did delta pressure look like on that day? Oh, you say, well, Brent, it's all bright blue here, right? But at 9:30, the map doesn't look like this at all. There's no buyers below, right? There's some sellers above, but remember talking about how the contour lines describe support underneath? There's no blue, indigo, purple, whatever you want to call it, it doesn't exist, right? And then what you see happens is the market hits 5,400. You could probably look at the color change on the map and tell exactly the moment at which the market bought Jensen and Huang's, customers fighting over our chips, right? Because you'll see this map just all of a sudden go super bright blue. See that? And then up we go. And this selling zone disappears, and then it's just all support. So that is how that map, this shows you how dynamic the map is and how valuable it is from an intraday tool, because you're gonna, a lot of people have different market disciplines. I could be a technical analyst. I watch Fibonacci retracements. I joke like I follow moon cycles or whatever. Fine. When it lines up with options flows, right, and you see put sellers coming in at a level that you think is market support, for example, that should embolden you to say, great, the options market, we're in sync. Like today, you're thinking to yourself, great, I want to short this market. It's too high. You're fighting against a substantial amount of gamma. At least that's what we're calculating, right? And the statistics that we have around the stability indicator back our views here. Again, it's about probabilities, no guarantees here. But when you look back in time and find positive gamma is associated with market stability or tight market moves, use those statistics to your power. People who are asking questions, you can come in here and set your own colors. And whether you kind of zoom in or out, or depending on the scale you set here, you can change your colors a little bit. I tend to leave mine on auto. I just kind of like to, for the color scale for me personally, I just like to let the system automatically set that and forget it. Some people like having, more or less dark colors. You can also change the color patterns here. Some people like the light chart versus the dark chart. I like the light chart because I like to see that. I think it clears the delta neutral for me a little bit better. So you can change the look of this a lot. I've seen a lot of people change indigo to something more like blue. Oval shaped eyeball. This is that is our manual. I'm not sure if that's what you're talking about. You can turn on our SpotGamma key levels. These are the levels we produce every single day. And have been doing so for 5 years almost now. This learns about the strike plot, so another access to the manual. This is stability gauge, which we've been discussing. Want to make the chart larger? There's a box right here. There's a box for that. Bam. We started, I'll give you a little background on this. We started compiling positions in January of this year. We started beta testing charts and plots in April of this year. So our top SpotGamma members, our best contributors, they love beta testing stuff, and they're really valuable members of our community. And so we went through, I'm not kidding you, probably 24 iterations of different heat maps, charts, ways to look at the market. And so we've had actual people, traders, many of them professional, this is what they do for a living, trying the charts, giving feedback, finding out what's most useful. And our goal with this was to say, look, imagine you sit down in front of this and you don't know anything about dealer hedging, right? Could you still use this? And when you go red selling pressure, blue buying pressure, so like red bad, blue good, or purple good, it's all you need to know. I believe that you can navigate using this tool if that's all you know, right? You believe in what the data is showing you because it's this dealer hedging stuff. You just go, I don't care. Red bad, blue good, sweet. And that's the goal. And we've invested an unbelievable amount in engineering. We have top engineers from Fortune 4. I keep saying I'm going to look up what exactly the company ranks are. Biggest tech companies in the world, because we wanted to make sure that everything from the back end data to the front end was as smooth and as flawless and as valuable as possible. And people's feedback here has been really great on that point. a stable tool made by top professional engineers, built by and backed by data of people who understand dealer hedging flows and markets. So we're really quite proud of that. And again, here's the link: tracethemarket.com. spotgamma.com/trace-the-market. If you go there, you can catch our deal, which we're offering until Sunday night. And if you pay, I'm told there's actually a giveaway. We were joking around a little bit, tongue in cheek, about this SpotGamma giveaway that we're doing. We gave away a bunch of prizes on the actual webinar, but if you sign up by Sunday, you will be entered to win a drawing. And then that drawing, you're getting a year of SpotGamma Alpha. You're getting the Hedge, which are our educational course. You get that for free, and you get a new 24-inch HD monitor. The reason we decided to give a monitor is because we had many users, including the guy's an incredible trader, John Carter, Simpler Trading, said, I need a new monitor. And we're like, you know what? You're like the third person that's told us that in the beta group. And so let's give one away, right? Because you want to watch this all day long, every day. So if you sign up by midnight, you're going to be entered to win that. A couple of people already won that. And so kudos to you. Hopefully you winners are on this right now. I'd appreciate that. And then not only that, look, you get all this other stuff. You get the founder's note, which I mentioned before. You get access to our equity hub, which is single stock level. So you can see where all the big positions are in key single stocks. I was watching NVIDIA before, and look, there's a huge amount at 120 sitting there. So that's a pretty big support level. 125, big resistance. We've been ping-ponging back in there. You get access to our volatility dashboard. You can look at skew and all sorts of different names. We were actually looking at some of the Chinese stocks, which are just ripping, and the vol is just so expensive. So what do you do with that? We talked about in the Q&A yesterday. We do 4 Q&As every single week. You get 2 with me right now, and you get 2 with Imran, who's a good friend of ours and a great trader. Integrations with different platforms. You get HIRO, which we haven't talked about today. So how are the options flows actually impacting the underlying stocks? So there's a lot also that goes along with Trace, even though Trace is turning out to be this kind of marquee tool to watch and really help people navigate the markets. We got a couple of new things coming out as well by the end of the year, a couple of amazing new tools in addition to rolling out some ability to see our new positional data in single stocks. So a lot cooking over here. We historically do not raise prices on current subscribers. So there are a lot of people who are locked in at wonderful prices, wonderful for them prices. But we like to reward people for being loyal to the SpotGamma community. And so we don't adjust those prices, even as we add amazing new tools. You want to see the GEX broken up by strike. You can see open interest by strike, and then we also just net it out for you as well. So what you can see is this is the big position. We're making a market move now, so let's check out what this is. This will be interesting to see. We got the big big dealer long call position. HIRO's making a move right now. Make sure I'm looking at S&P Index HIRO. Indeed, I am. So S&P 500 shows you options flows from the SPX index as well as spiders at the same time. And so there's some pretty good sized negative delta positions coming into the market at the moment. And you can see that because this purple line is moving down rather sharply. And so it's going to be interesting to see now if this dip is related to positions being closed here or at one of these other positions. Obviously, the map will update here momentarily and give us the latest and greatest details on that. Sorry, I'm scrolling through the chart here. So you got anything else interesting? Any other interesting questions I can get at? Yeah, and I see a couple of people asking for some. Yeah, looking for some various features here, and we're listen. We don't rest on anything. We're continuously innovating. In fact, the day after we launched this, we had a meeting about our next product launch. So I was, I think I'm punching like a 70 to 80 hour week, and then we're talking about the new product just the day after we launched the first one. So it's pretty funny. Yeah, a little bit being closed, as Justin Goodman says. And this is being so the HIRO signal here is real time. This has a 10-minute lag, but we can see this 5750 position is getting close. All right, you can see that the white dot is the max gamma of the position, right? And so we're seeing that start to come down. And if I look at net open interest here, we could possibly trace this a little bit more and see what's happening. Yeah, you can see some of these calls are starting to get closed. Not a ton yet, but they're starting to get closed. That's 6,000 calls at the moment. The high of the day was 6,200. So only 100 so far. That's probably not enough to be these deltas, but we're gonna we'll keep a watch on that. And the idea here is like as these zero DTs are being closed or moved, that is creating the current market volatility, right? That is the volatility signal when you're seeing these zero DTs close and shift. And when you're getting the map updated constantly and you're seeing HIRO in real time, then you can put together, okay, it was a closure of zero DT that caused that volatility or leaning on the market. So I can bet on some mean reversion here if I think I can get enough of a move. How do you change to HIRO? If you hit this 3-line indicator up here, you get access to HIRO. HIRO is not part of our free trial. None of the other things on the menu here are available today. Trace is just open for everybody, but we welcome you to come in with this deal, spotgamma.com/trace the market, and try out all of the products here. And then, look, it's an incredible time to try it out too, because Monday we get this JPM Collar trade, and so if the market is as volatile and things are shifting as we think is going to happen, then the proof will be in the pudding, right? And there will be a lot of actionable data coming out. And then not only that, we have the election coming up in about a month, and volatility is doing a lot of weird things around that election. And there's going to be just a lot of things to have to watch in and around that date. Yeah. So how do we use HIRO? I mean, HIRO is signaling to us that some positions are getting closed. And if we dig into HIRO even a little bit further here, what we could do is we can look at just zero DTE HIRO. So if I turn on next expiration only, what you can see, number one, is these two lines, the purple line, which measures all expiration flow, and the teal line, which is zero DTE only, those two are right on top of each other. So that tells me that the only thing trading today in the options market, the only real stuff trading today is zero DTE flow. That's pretty common in these markets, right? Zero DTE dominates. And so what you can see here is exactly at this time that the market dropped, there was indeed a big zero DTE position changed here. And the idea is that as these lines go lower, that is telling us that dealers and market makers have to sell futures or sell stock in order to hedge their positions. And I can break that down by puts and calls. And so you can see right here, somebody looks like bought zero DT puts. Now, do they buy those to close, to sell or close? Well, that's where Trace comes in, because now I go, okay, great. Looks like there was some puts getting covered here. And so we can start to identify via the GEX by strike plot what maybe, was so impactful to the market here. And if we wind back, we can see these GEX positions move and get an idea for what has changed. And what it looks like is these guys right here. That position looks like it was closed up. And that is maybe offering some of that very brief instability of the market. A couple thousand contracts, right? Doesn't seem like maybe all that much, but the S&P has such a big notional value, and there's just not much else going on that you see the fingerprints of these zero DTs a little more actively around those timeframes. Yeah, and so the idea here is that if somebody is buying puts, right? If I'm buying a put, the market maker is selling a put, and so they're just short a put. And so if the market is going down, they have to sell futures to hedge themselves. If I was short a put before as a trader, and then I buy that put back, it has the same short-term effect, you could argue, right? Because suddenly the dealer went from, hey, I'm long a put as a market maker, and then this guy just came and took that position away from me. So I have some hedging flows to adjust around that. Yeah, and thank you, JT and Eric, for all the support there in the chat. It's hard to monitor all the chat comments. Excellent comments. Thank you all so much. And make sure I'm getting to everyone's questions and describing the market flow kind of at the same time. You see these strikes down here building a little bit in size too. So, again, the idea here, which you all may be watching the market right now saying, look, this is starting to get ugly, it's starting to get ugly. I'm worried. Everything about this still says that there's buying pressure down here. There's positive gamma strikes building down here that suggests market should be supported. You look at this charm pressure map, right? This blue zone tells us that buying pressure should help lift the market up. And so if we do happen to trade down to as much as this 4740 area, then I would be looking to play a market recovery. Now, was cheap zero DTE positions, could I put on a call fly struck around 5750? Could I sell puts below? Do I just buy stock or buy futures to bet on that? I mean, there's a bunch of different ways to express that. You have to evaluate the risk reward of each. But that's what we're watching for here in real time. And, everything is pointing to this trending lower, this kind of dip-ish getting bought and us moving back in line with this hedging map and moving, probably closing near the 5750 area is really what it is. And indeed, this is SPX positions that we're watching now. Yeah, and SpotGamma Support notes this is, I think, our 11th webinar. I don't know if that's actually true. It feels like that much. Off the cuff commentary, I appreciate it. So, the holy grail is on one of these. You can see real-time market action, and we can go, look, this is exactly what's going on. That happened yesterday in a subscriber webinar. We detailed that after on Twitter. But yeah, we're watching these positions here. It's negative delta pressure from the S&P. And so we're looking for some strike action to come in. We want to see HIRO stop and move back up, which tells us that the deltas have shifted back up, which implies that deals will start buying the dip. So there is indeed selling pressure. And this is not, in my view, about trying to be short the market right now. It's about identifying, is there a dip buying opportunity, right? So show me a move and then let me react to the move. And when do I think the move will exhaust so I can react to it, as opposed to being like, oh, I need to try to pile on a short now. I don't think that's the right way to express a view like that. Wait for the deltas, HIRO to flatten out. We see some support strikes down here, right? And we have a target price. So once I feel that the market may have hit a final support level, which I'm weighing by watching HIRO bottom out. So I want to see HIRO move back up, which is that purple line. And, see these strikes hold. These are all support strikes. Then I'll be happy looking to bet on a move back up into this general area of 5750. So, it's a good time to assess a couple of trades, look at the risk reward of trades. Zero DT options get cheaper as we go over the course of the day, right? So, there's a lot of different dynamics at play that you can assess while you're waiting for a possible bottoming here. Again, knowing what your target price is going to be. Donato said he saw a jump here in 57.55, positive gamma. Yep, good call there, Donato. 5 stars. So this was at 11:20. So, over the last 45 minutes, what that look like? And the interesting thing about that position is gamma's highs for at the money strike, right? So as the market's going down, that gamma shouldn't be growing. That's telling me that somebody did indeed add those positions. And obviously you could verify that by looking at call open interest or put open interest. And in this case, it looks like actually somebody is bought some puts up there is what that is. Excuse me. The trader sold puts, market makers long those puts. So they have some positive game in that position. All right, we are nearing the top of the hour. I love some of the comments of people that are able to pick up on what's happening already, sees that you're able to assess the order flow for yourself, which is excellent. And again, we got another 4 hours in this session. So you have 4 more hours to watch trades for free, everybody. By the way, it's incredible how worldwide the U.S. options market is. We're really blessed to have members and people trying this out from literally all over the world. It's pretty fascinating. I don't know why a lot of you are up in the middle of the night, like in Asia trading, but I'm grateful. Thanks for being here. So go to spotgamma.com/trace the market. You have until Sunday night at midnight to grab this deal. Trace also comes with the Alpha membership, which gives you access to all of the other tools that we have here, including our founders notes. Why does this matter so much right here, right now, today? Because we have this really big JP Morgan position on. Again, you can see it right here in the non-zero DT gamma space. You can see it in the open interest. And this is a position that is really controlling the market. And we've had a quiet market. I think that changes on Monday. We start to get more volatility on Monday. And so hopefully we're able to help you navigate these coming days as volatility likely picks back up, right? So it's going to be an exciting time, and I think a great time to catch some of these options insights. So that's going to be it for me. Thank you all again for joining me here today. Again, spotgamma.com/trace the market. I will also be back on Monday. I have a 1 p.m. Q&A. So all members will be able to join that. That's for members only. And so we'll be talking about all these dynamics. Generally, you see some of those JP Morgan related trades hit in the morning, so 10:30 or 11 o'clock. So we'll be seeing those in essentially real time through HIRO. Trace map will be updating as those positions come into and out of the market. So 1 p.m. I'll be there. Imran has a morning Q&A, so you're getting 2 Q&As on Monday. And we're super excited to watch everything unfold. All right, that's it for me. My voice is going. Thank you all so much. If you have any questions, info@spotgamma.com. We'd love to see you in the Discord. And please shoot us your feedback. Feedback has been amazing. We're blessed to have overwhelmingly positive feedback. People saying they have a lot of success with the tool. And we are super grateful to help everyone on navigating those markets. All right. So that's it for me again. Thanks so much.